Hello, welcome to the Financial Detox podcast. We are so excited to be here with you with our refresh, renewed, reinvigorated Financial Detox show. I am Jason Labrum, your host in studio with my man, the best co-host on the planet Earth, Alex Klingensmith.
Big words, man. Big words.
The best on the earth, Alex. I think it's undeniable.
Okay. Let's see. Let's see on the new show version if I'm any better than the old show version.
Let's see how it goes. This is Financial Detox. As I said, I'm Jason Labrum. We're excited to be here for a couple of reasons. One, we have a wealth management firm, and we realized after running this wealth management firm for years and years and years that there needed to be a consumer education brand. There needed to be something that really helps clients avoid toxic financial advice, manage their wealth for the maximum impact for their personal lives. And Alex helped me come up with the Financial Detox concept, and show. And we have a book called Financial Detox as well. So you can get that on Amazon. But Financial Detox is about breaking down some real issues. And we kind of hit some things head on. We get maybe a little controversial, but importantly, we talk about how you can achieve true financial peace of mind and make the best of your life with your money. I mean, that's Financial Detox. And I've spent 12 years at two major Wall Street firms. In 2009, we started IDA Wealth, and it has grown and flourished as we've served clients with not only preserving their wealth and giving them access to great investments and investment strategies from a fiduciary perspective, a true full-time fiduciary. And we're just excited to be here today on Financial Detox. We have our literally producer Brian is in the studio producing this show. I think it might be the best. Hey, there you go, Brian. I think
Shayna.
Yeah, exactly. And Shayna. And I think this could end up being maybe the best Financial Detox show ever. So thanks for tuning in.
I want to add to your story, if I could, just who we are and how this was born, because when I first met you 12 summers ago, your story then hasn't changed to now, but 12 years ago, it was really this powerful, like, coming out of those big Wall Street firms and needing to be able to create an environment for clients to feel safe, to feel like their advisor actually works for them and not for the firm, the Wall Street firm. Right. And that was the story then, powerfully so. And things have changed a little bit since then in 12 years time. I mean, the industry, our part of the industry has grown. RIAs, full-time fiduciaries have grown. It's still a little bit confusing, right? The Wall Street firms still carry 70 to 80% market share, unfortunately, but also awesome opportunity for clients to know the difference and for us as a company to grow and continue to serve people. And that's, I think, where you were like, hey, we need to, like, everybody thinks we all do the same thing. Like, how can we differentiate how we're helping people weed through all these choices? And that's my little add-on to your story. But
yeah, but why don't you give your background too, Alex? I mean, as we're introing the show, because you bring a lot of years of experience in helping clients with wealth management, and we met and have had, so much fun building and running this company and helping our advisors and clients.
Out of college, I didn't know what I wanted to do back in 2002, 2003. So I started selling insurance, which was a very good way to get tough, learn how to accept rejection, meet a lot of new people, learn a lot of different, in Southern California, there's lots of different cultures. So really, really good way to learn how to be consultative sales, which is how I learned how to do what we do. Then the 0809 thing happened, of course. We all remember that, the debt crisis of 2008, 2009. And coming out of that is soon after is when I met you, and I was already dabbling in securities and learning how to do investments, right? True investments, not insurance as an investment, but true investments. And you quickly saved me from a path that would have taken me somewhere else. But learning that there's a way to do this where it can be, we're on the same side of the table as the client all the time, through everything we do. And also the spirit of our philosophy being evidence-based, not being like, chasing hot dots as you call it, trying to time markets or pick stocks, or just a very, I wouldn't say stress-free way to do it, but a more peace of mind way to do what we do. Right.
Right. Process-driven, right? Process-driven that has fundamental strategy behind it as opposed to tactical guessing and whatnot. So awesome, Alex. Thank you. You're not only a great man, and if any of you know Alex, he's a great man with high character and integrity and morals and values. And that's what we built this firm on, is a bunch of people who come together with a mad passion for helping clients. And Financial Detox is really the offshoot of that, to get to people that we don't know and we don't work with as clients. So we thank you for being here and tuning in today. It's going to be fun. We've got to hit the real topics head on today. I mean, it's We're going right into it. It's going to get real. We've tried to avoid some talk of politics and things that are going on in the world, but it's pretty hard to avoid talking about politics when you have an attempted assassination on a president of the United States and a current leading candidate as president of the United States. Like, what in the world are we dealing with here? Now, the last attempted assassination on a president was Ronald Reagan. If you go back before that, you go to JFK. Then if you go back to that, before that, you go to Abraham Lincoln. I would argue that all of those presidents were disruptors. They were presidents who did not like the status quo. They didn't like the swamp. They wanted to get rid of political corruption and empower people. 3 of those being Republican and 1 of those being a Democrat. And why is it that the presidents who are against the political grain are being assassinated or attempted to assassinate? And so this show, we're going to talk about that. And it really ties into your money, how you invest. It ties into politics, election years. A lot of clients are telling us they're scared and I want to get out and wait or hold some cash, or I want to be in, or I'm going to invest this way if one president wins, and I'm going to invest in a different way if another president elect wins. So it's a real mess. And this is a great time for financial detox. And as the show states, we are going to detoxify you just like a good health cleanse and getting that alcohol out of your system. We got to get the bad information out as it relates to your money so you can better protect yourself, preserve your wealth, and grow it for your family and your future.
Yeah. Yeah. I mean, what a scary moment, right? I was literally in a giant shuttle bus thing with a bunch of, actually I was stuck with the kid bus. No joke. All the adults on the bus behind me.
They put you on the short bus, Alex?
We were in, it was, actually it was shorter. But when I heard, this is a weird story, but I'm going to tell it anyways, because this is the kind of information, this is the way that a lot of our clients, a lot of investors, a lot of people that want to make money and save and invest, get their news now. I'm sitting there with 2 or 3 or 4 teenagers. My daughter's one of them. She's just turned 14, and her friends. And one of them's on Snapchat, right? I don't like social media. I really don't at all. I don't have any of it except for LinkedIn, which you could argue social media, but I use it for business, I think. Anyway, she's like, oh my gosh, there was a shooting at the Trump rally. I'm like, and I just dismissed it. Like, that's not real because it's Snapchat, right? But then a couple other ones, like maybe 5-10 minutes later, we're in Mexico, right? This is on Saturday. And they validated it through other social media. And I'm like, okay, maybe this is a real thing. Like, what really happened? And so that's how I'm learning about this thing. Immediately, you know what I thought? I'm like, oh my gosh, they're going to close the border. I'm going to be stuck in Mexico. If I was an investor, I'm like, the market on Monday, what's it going to do? Is it going to be, Is it going to drop? Is it going to go up? Should I do anything about this? And then I thought about all of what we're doing, and I knew we were going to record this show today. And I'm like, what do we tell people, Jason? Like, how do we help people center back onto reality of what they can control, what they can't, and stay focused on their long-term goals? Like, what do we say? Right?
I mean, that's what we're going to get into. Let's do it. I mean, let's dive in and start talking about some things.
So in a normal election year, what do we tell people? Let's pretend like the assassination attempt put aside for even just a moment, if possible, but normal election year, what do you say?
Right. I mean, it's amazing how much emotion it draws, but it's been way more in recent election years. I've done this for 27 years. I know I only look 30. Actually, I look 60, even though I'm 50.
It's good lighting, huh?
Yeah, right. Shayna and Brian, our producers, they got lighting on us today. So we're really up in our game here. It's the real deal at Financial Detox. But it's become more and more contentious. And we did a webinar earlier today, and we were talking about investing with a tax mindset. I think it was a great webinar. I couldn't help myself but to get into investment decisions regarding political and election years in environments like this. And I think we have, and maybe I'll save that for the end, kind of a thesis on where we need to go as human beings, and I think how it works. But let's just go through a couple quick stats, right? In the average 1 year period. So if you take a 1 year period, the average of all 1 year periods, the market is up 74% of the time. I could be off a percent or two, but it's about 74%.
Which market?
Yeah, the stock market. Let's call it the S&P 500. Good point. Now you're unpacking a bag of previous shows.
I'm just teeing you up, man.
I love it. So if we measure the S&P 500, the average 500 stocks, pretty much large cap growth, 74% of 1 year periods, it's positive. If you take election years outside of that, 82% of election years, the market is positive.
which is 4 out of the past 24 going back to the 1920s, even through all those assassinations and attempted assassinations you talked about. I read about that more, by the way. There's actually more presidents that have had this happen besides those 3 or 4, but those are the big names that we all know very well, right?
Yeah.
That's crazy high numbers.
It's crazy high numbers. I mean, and even if you think about volatility in general in the markets, right? And you talk about here's an election year, and should I be trying to get out and get in, or should I do something different because it's an election year? Well, you got to know that 70% of 1 year periods, markets in general, go up. So to try to get in or get out is pretty tricky because you have to get 2 bets right. And I would argue that your bet is less than a 50-50 because when to get out, you're trying to guess on it's basically there's 365 days in a year. How many trading days? About 220 trading days a year. You got to guess when to get out. And then you have to in turn turn around and guess when to get in. Let's just give you the big benefit of the doubt and say it's a 50-50 chance. Well, it's a 50-50 chance. If you do 50% to get out and 50% to get back in, you only have a 25% chance of being right. That's not good. It's not good. And in election years may be worse. But here's the kicker. You know, when you look at 3-year periods, your statistical odds of having a successful investment experience, you're now in the mid to high 80s. If you go 5 years, you're in the mid to high 90s in a truly diversified portfolio. So does all this guessing and wondering and trying to time the market and worrying about that, does it really bring any benefit to the table? And I would argue it does not. So should you invest differently in an election year? Probably not. Probably not invest any differently. Have a plan, have a diversified portfolio, know what you're trying to accomplish with your portfolio so that then you can invest around that and make that happen.
I'm going to compare it to COVID real quick because I was reading an article written by, or an op-ed by David Booth, right? One of the founders of Dimensionals, who we love their academic evidence-based approach. They haven't been right all the time on all the things, but the research and their comments are on point. At the end of March 2020, the S&P was down 20% for the year, but investors that stayed in the S&P were rewarded at the end of the 2020 year. It was up 18.4, 38% turnaround from its March lows. How scary was the pandemic? I mean, you know what I mean? And then put that into context of what we're dealing with right now.
Maybe one of the biggest events in our generation, right? That, I mean, you shut down the global economy and whatnot. That's a great analogy. And it goes back to in the average year, there's 14% volatility from peak to trough. But there's so many years, about half, where the volatility is more than that. Trying to time it becomes a total mess. It becomes so difficult to time when to get out, when to get in. So we stand by, and as a financially detoxified human being, you've got to understand that game is eventually a big loser's game. The winner's game is by developing a strategy, a process, investing with a purpose and intention to make the best financial life for yourself, solving for your future expenses and needs, building a portfolio that delivers that, continuing to review and monitor it. I think it's good. What about this assassination?
I was just going to say, so now let's go a little further out on the spectrum of like, this is not a normal election year. Thank you for the video. This just happened. So now what happens? Does the whole rule book change?
You know, I hope one thing happens. And this is where I'm going to get on a bit of a soapbox here. I'll try not to make the monologue too long. We have unbelievable human beings who are clients who are left of left. They're left. They are left. They are liberal. They think that the liberal policies are correct and that Republicans are whacked. We have Republican clients who are right wing and conservative, and they think that those policies are correct and the left is whacked. Now, I promise you, and I know this is a fact because I talk to both sides and I love them both and they both have points. But when I tell them, if we could zap your memory with the Men in Black pen. Do we got a video of that, producer Brian? Like the Men in Black little theme where they, isn't that where they hit them on the head with the thing, or they zap them and then they forget their memory? Yeah, you shine it in their eyes. So the Men in Black theme, if we could take the general populace of our country and you could zap them with the Men in Black pen, put them in a room, line up all the real policies. There you go. Here's the pen. We're getting zapped. All right. So boom, look at the light. I love it. So if we did that with Democrats, with liberals, with Republicans and conservatives, you put them all together, you zapped them with a pen and you put all the issues on a board. 80% of those issues, you would very easily 80% of the people would come to agreement on almost all the issues. If you talked about them if you zapped their mind of their previous political bias, the social media confirmation bias that has been pounding them in the head the last 10 years, getting worse every day. This is what I think your investment decision should be affected this way, is like, we have to change our behaviors as human beings. And I'm guilty of it too. I have to change my behaviors where instead of looking at things through the social media bias and the political lens that is stuffed into my brain against my own voluntary will. I guess it is my voluntary will because I turn it on. We have to think differently. And I hope that's what happens here, right, Alex? I hope that we see a real kind of coming together. But the rhetoric, the violent rhetoric, the burning down cities, you have tons of videos of Clinton, Nancy Pelosi, Maxine Waters. Literally, I've got a 2-minute reel of the left calling for violence. Biden said we need to put a bullseye on Trump 5 days before the attempted assassination. I don't care if you're left or right. That's nonsense. To talk like that is, I think you have blood on your hands. I don't think that you can do that and say that. And we need to come together as a people and be stronger than social media. And we need to, I think, come to the middle, because 80% of the population, if not 80, it's at least 70, I believe, are all independent, common sense thinkers. And we need to stop letting social media push us out into the extremes.
Yeah, I think it's good for whoever's listening to hear that too, because we're just human beings. We have families, we have kids, wives, we have, we're affected by everything too. We're not literally just some robots behind computers that are managing, our clients' money. So we have to go through the same process in our minds. How are we going to react to what we just saw, and how are we going to coach and guide our clients through yet another major life event like the pandemic? Like before that, it might have been Brexit. Before that, it might have been the debt crisis I was talking about earlier. Yeah. There's always going to be something new and something scary. Booth talks about managing risk. He talks about accepting investing for what it is. It's not fun. It's painful. It's difficult. And that's why you get rewarded for investing through everything in life. I think that's how life works for the most part. The most rewarding things are not easy, right?
Yeah, it's not supposed to be fun. Like investing, people think, because you had, even look back to the E-Trade commercials, man, they were so good though, right? Where the E-Trade babies rocking, having fun. Hey, just do a trade, click, just do this, click, making it seem so fun and cool to pull in people. I love that it gets more people investing, but investing isn't fun. It's work. It takes research. It takes diligence. It takes, a plan, and making a plan and a strategy and a process and following it is never fun, but the outcome can be great. But it's not supposed to be fun. And the volatility that we've seen has been so de minimis lately that you got to be ready. So I think between, Trump winning or Trump losing, Biden winning, if he's the actual candidate, I'll be really shocked if we don't see increased volatility. That doesn't mean get out. That means better opportunities for tax loss harvesting, better opportunities to reposition and tweak and rebalance your portfolio.
In simple layman's terms, are you saying that no matter who wins, don't worry, for compliance purposes, this is not a guarantee or a promise or advice, right. but one of the theories, one of the things that could happen next year is no matter who wins, the markets are going to go down. Is that kind of possible? And up too, but like you're going to see some movement. Where this year it's been like slow and steady, right? Yeah,
I'll be really surprised regardless if we don't see some pretty serious volatility between now and the end of the year and after. But that, as a 27 years of experience and having made mistakes, plenty, which is one of the reasons our clients hire us, because they know that the mistakes we've made, we're not going to make again. And we've seen hundreds, we've made dozens, maybe we've made hundreds, but you hire a really good fiduciary advisor so that you don't have to make the mistakes that other people have made. So regardless that, yes, Alex, I think there's going to be volatility. There has to be. Eventually there has to be some pretty serious volatility because we haven't had that much. Mm-hmm. It doesn't change how you should invest unless you don't currently have a disciplined plan. You don't have a comprehensive goal of where you're going and why you're investing. Then, it's time to change. It's time to get that plan. And that's what Financial Detox is all about. We refer you over to our wealth management firm, IDA Wealth. We help you build that plan. And
one of the most basic philosophies that we adhere to, maybe we take it for granted that people don't even agree or understand what I'm about to say, but So like, if you think that might be volatile and you're scared, one of the things you have control over is if you're diversified or not.
Yeah.
Basic 101, right? To us and maybe to many people. But so like, if you own 2 or 3 stocks and you're like, oh, there's an attempted assassination. I'm going to buy defense stocks. I'm going to buy 3 Raytheon, Northrop, and insert whatever is number 3. How would you respond to a client asking you that question, Jason?
I actually had it more than once in the last week or so. And I'm sure you have too.
I bet.
I'm sure you have too. If you have the right portfolio, you already own those stocks because you don't want to invest, I believe, particularly if you've created wealth. And a lot of our clients have created wealth one way or another. They want to preserve primarily, then they want to continue to grow it with a real purchasing power. But I think going in and tilting into one sector or changing or chasing like that ends up, you spend a lot of time and energy, and I think it reduces the likelihood of a positive outcome because now you are guessing and it sounds so boring, and that's hard because financial detox is cool. I mean, it's fun and it's cool, and at least we try to make it that way. But yet we always go back to this disciplined philosophy of having a philosophy, having an investment strategy, sticking to it, tweak it, rebalance here and there, and do the things that you need to do to manage it. But don't go chase a certain type of stock because of an assassination attempt. As
concentration's a risk, right? Concentrations. So similar concept, but the question then turns into like, okay, fine, but inflation you can't ignore. That's a real thing, right? Yeah. Inflation's really happened. It's maybe not as bad as it was last year and the year before, but how do I adjust my investments based on that reality?
I think you have to do better with your investments because inflation's here. I mean, everybody knows that everything you buy has gone up in price substantially. I mean, over the last 4 years, we have had radical inflation. The cost of everything has gone up. So if you're getting the same investment returns or you're not optimizing and improving how you do things, then you just have less money, right? Unless you've made proportionately more, you have less money to spend, you have less money to enjoy. On our tax webinar today, we talked about how by just using proper tax sensitive asset location, meaning if you take the 3 buckets of money where people normally put money, you either have an investment account, a trust account, that's after tax money. You have a tax deferred account like a 401k or an IRA, and then you have a tax free account like a Roth. If you take those 3 types of accounts, you need to put certain assets in certain accounts. We should get a visual on this next time, Brian, producer Brian. We'll get you one so we can throw that up next show.
You got it.
Yeah, man. But which assets go in which account? That alone, combined with tax loss harvesting or creating a personalized index of your own as opposed to buying a mutual fund or ETF, those are detailed topics which we can talk about if you want to reach out to us at financialdetox.com. But these differences can be actually proven by InvestNet and Russell and Vanguard, who did studies on these. They can add 1% net additional return to you a year.
Yeah.
If you think about 1% a year return compounded over your whole life, these are huge impacts. But yet most of the clients we see coming into our firm, whether through financial detox or through referrals or whatnot, their portfolios are not optimized for tax sensitive location. They are not optimized for tax loss harvesting. They aren't utilizing custom or personalized indexes. And that's what we have to do now that inflation is real. Your money is worth less. So you better manage it more.
And how do you balance that though with being, so let's say you're one of these fearful investors right now, given the election year and this recent attempt.
Yeah.
How do you balance that with, I need to make more money, but I also want the safest possible investment choice because I'm scared.
Yeah. Yeah. I think it's such a great opportunity right now to be an investor and to be a financial advisor, to be somebody who cares about preserving your wealth and growing it for your future, to maximize your life and what you can do for those around you. The time is better than ever because 10 years ago, it was very difficult for a mass affluent or even high net worth person. So mass affluent, I'd call anybody who has 500,000 to 2 million investable assets. High net worth, I'd call more than 2 million, maybe up to 10, and maybe ultra high net worth is 10 north or 20 and north. Alternative investments. So investments that aren't public stocks, aren't public bonds, CDs or cash, right? These are private investments. Those investments are now available with the right advisor at a cost-effective, in a cost-effective manner to the general investing public and people like you and me, right? We can now buy alternative investments, which can and have historically, they're not guaranteed, same as compliance. Jordy's not in the producer room, so that's great, but we'll still be careful.
They can
and have historically shown to measurably reduce the volatility in your portfolio while also increasing the return or potentially increasing the return. And look, right now, about 95% of mass affluent investors and high net worth people don't have any alternatives in their portfolio. They don't have private equity. They don't have private debt. They don't have private real estate. They don't have infrastructure. And these are some asset classes that by owning, you can now optimize your portfolio for what we call a better risk return profile.
Let's go to the flip side. So then you've got somebody who's like, I get there's a lot going on. I anticipate volatility and I embrace it. How do I get aggressive, Jason? I want to go aggressive. I want to take advantage of this opportunity where others are fearful. I'm going to lean in.
Yeah, I think it's great. I mean, if you can truly operate with a contrarian's mind, and Warren Buffett said it best, right? When he said, when others are greedy, be fearful. When others are fearful, be greedy. And of course, Warren Buffett is a great, great investor over long periods of time. You know what his best attribute was? What helped Warren Buffett be so successful as investing? It was time, right? Time in the market, not timing of the market. It wasn't stock selection. It was that he was an investor for a long time and his growth went vertical towards the last 10 or 20 years because of compound interest, which is probably the eighth wonder of the world. So if you want to get aggressive and you want to get after it, I think you have to look outside of traditional public stocks in a way that you haven't in the past. Right? The capital market expectations, meaning what do the big firms and all the research analysts, what do they think stocks are going to do for the next 10 years versus what they have done? And generally, those expectations are in the 6 to 8% range, that stocks are going to do 6 to 8. Historically, they've done about 10, maybe 10 to 12, 10 to 13. But going forward, the expectations is they will do less. One, because inflation is higher and companies make less money when inflation is high because they have a higher cost of borrowing capital to go deploy into their growth strategies. But two, PE price to earnings ratios are pretty elevated right now. And so from where we're at now, it'd be difficult to see 10 to 12% returns in the public stock market. Where can you do better and be more aggressive is maybe in the private markets. Check out this stat. So approximately 15 years ago, there was 15,000 publicly traded stocks in the United States with over 100 million of revenue. Today, that number is 4,000 publicly traded stocks with 100 million of revenue. Yet we have 77,000 privately traded stocks with 100 million of revenue. Where is the opportunity set best to invest your money? In the 4,000 publicly traded stocks that are very efficient and everybody knows everything about, there's no mispricings, or in the private markets where private equity firms can go out and do due diligence and find really great innovation and ingenuity and creativity, and they can invest in an inefficient market and they have 77,000 to choose from over 100 million. So if I'm getting aggressive, I'm looking outside of public markets.
And then those little companies get bought by the big publicly traded ones, and then you make even more money on the way out.
Which is a whole nother paradigm. We got to do a show, and Shana, producer Shana, and who's been so awesome at helping us getting this show spruced up a bit, I shall say. But one of the next shows we got to put on the outline is to really just talk about that, Alex. Yeah. Those big
the evolution
companies.
of our investment.
Yeah, the Magnificent Seven, and the fact that they've become almost private equity firms. I mean, the chart that we have, which we can pull up on that show, is something like 250 acquisitions over the last 5 years by Google. I mean,
hold on, save it for the next show. Don't give away. We got to stay on point here. We got to stay on point.
I was looking that up right now.
Oh yeah. All right, we got Brian will pull it together for us. See, he can handle my randomness.
We'll just go on to the next show right now. No, I think this year is going to get probably more stressful as it goes on, right? Yeah, not less stressful, especially if you're tuned into politics, which I believe everybody, as you were kind of saying earlier, and this is where you're probably going to help people see how you feel about it. Everybody has a responsibility as a citizen of this country to pay attention. Don't they?
I think we do, but I think it's how do you pay attention? It's like, how do you invest, right? If you pay attention and you invest by being stressed out and guessing and getting in and getting out, it just doesn't work very well. But
it's terrible.
Yeah, it's a terrible experience, right? And I think everybody wants a good experience in life and a good experience with their investments. And I think the way we as human beings, and Michael Jackson said it best with Man in the Mirror, right? You want to change the world, take a look at yourself in the mirror and decide, are you adding fuel to a political fire and divide in this country? Or are you bringing people together? I, for one, need to do better at bringing together, because I have great friends who are extremely left. I have great friends who are extremely right, and everywhere in between. And you know what? If we break down all the issues, they're not that different. And we as a country, I think this is the biggest issue facing us. Not what's the market going to do today or tomorrow, or, I think it's like, how do we stop divide and hatred? People hiding behind a screen, throwing out really gross comments, being gross, allowing algorithms to design you and how you think. We're better than that. We're better than that as a country. We are better than that as individuals. I know I can be better, and I'm gonna commit to that, because that's what's gonna have a real impact. And it's hard to deny that, allowing lower taxes, free markets to work, ingenuity, energy independence, not forcing things down people's throat from a political standpoint and from a governmental control standpoint is better for the economy and investing. So I hope that happens. I hope we end up in that place, whether it's a Democrat or a Republican. It doesn't matter. I think we should all be independent, and I think we need to make sense. So, that's where we're at. There's so much noise out there. And Alex, I'll finalize, maybe kind of finish it up with this, is like, people used to go to brokers, stock brokers back in the day, because they had information. And you went to a stockbroker because they could do your trades, and you couldn't do your trades. You didn't have your phone. You didn't have this. Now, I think people go to wealth managers, and I think more and more they're going to true fiduciaries who work at RIAs, registered investment advisory firms, don't have broker-dealer affiliations. I think people come to us, Alex, because there's so much dang information that they want help sifting through that and finding what is really impactful to them personally. Not noise, but what's going to make a difference in your financial life. And it always comes back to building that process, building that philosophy, being diversified. You can turn on the risk and volatility and go get better returns, or you can turn it back. You can dial that to what fits your plan. But don't just make that decision based upon risk and return. Make that decision based upon what you're trying to accomplish with your money, because your money is just a tool to help you either give philanthropically, to help others, to better your own life, to travel, to see the world. That's what money is. It's a tool. So let's make that work best for you in a way that has the highest probability of success, and that also has the most enjoyable journey. That is what Financial Detox is all about. And if you go to financialdetox.com, you can get a hold of Alex and I, or any of the team at IDA Wealth. We will talk through this in a personal discovery session, help you get set up. And we hope you love this show. We'd love you to check us out if you're watching on YouTube. Give us a subscribe and a like, all that kind of stuff. Let us know any topics you want us to hit and talk about, and we'll get into some really good detail on them, or we can brush over the big picture, whatever's best for you. But financialdetox.com is the spot. I'm Jason Labrum, your host, with Alex Klingensmith. And again, thank you so much for tuning in. We appreciate it. We look forward to catching you on the next show.